If you're just starting out in the world of investing and your goal is to build wealth, then you've definitely found the right place. Today, I'm going to reveal the top 5 investments for beginners, choices that could fast-track your journey to financial freedom. These aren't your run-of-the-mill investments. Each one has been carefully chosen to offer the perfect mix of safety and growth potential. Whether you're working with just $100 or you've got $10,000 ready to invest, by the end of this video, you'll know exactly where to put your money to maximize your returns. But before we dive into these game-changing investment strategies, let's talk about why investing is so crucial in today's world. With inflation constantly eroding the value of our money and traditional savings accounts offering pitiful interest rates, simply tucking your cash under the mattress or leaving it in a basic checking account isn't going to cut it anymore. If you want to build real wealth and secure your financial future, you need to make your money work for you, and that's exactly what smart investing can do. Now, before we jump in, don't forget to hit that subscribe button and turn on notifications. You won't want to miss out on more strategies that can help you grow your wealth. And if you're truly serious about taking control of your financial future, drop the word wealth in the comments below. Let's see how many of you are ready to start building real wealth today. Oh, and make sure you stick around until the very end, because the last investment on this list has the potential to completely transform your financial future. Trust me, you won't want to miss it. This final option could be the key to unlocking explosive growth in your portfolio, potentially turning a modest investment into a life-changing sum. Before you dive into the world of high returns, it's crucial to start with a solid foundation. Investments that are safe, reliable, and capable of growing your money steadily over time. Building this financial base is essential because it protects you from the unpredictable swings of the market, allowing you to grow your wealth with peace of mind. Think of it as laying the groundwork for a skyscraper. Without a strong foundation, even the most ambitious financial plans can come crumbling down. One of the best places to start is with high-interest savings accounts or certificates of deposit, commonly known as CDs. These options are perfect for beginners because they offer guaranteed returns with virtually no risk. High-interest savings accounts allow your money to grow faster than it would in a regular savings account, while CDs lock in your funds for a set period, often with even better interest rates. Both are safe bets, providing you with the security of knowing your money is protected while still earning interest. Let's break it down a bit further. With a high-interest savings account, you might see annual returns of around 1% to 2%, depending on the current economic climate. While this might not sound like much, it's significantly better than the 0.01% you might get with a traditional savings account. Plus, your money remains liquid, meaning you can access it whenever you need it. CDs, on the other hand, typically offer even higher interest rates, sometimes reaching 3% or more for longer-term commitments. The trade-off is that your money is locked away for a set period, usually ranging from a few months to several years. But if you're looking to set aside some cash that you won't need in the immediate future, CDs can be an excellent way to earn a guaranteed return. But what if you're looking for something that offers a bit more growth potential without significantly increasing your risk? That's where our next investment comes in: index funds and ETFs. These financial tools allow you to invest in a wide range of assets all at once, giving you instant diversification. This means you're spreading out your risk across multiple companies or sectors, which can lead to more stable and consistent growth over time. Plus, index funds and ETFs are typically low cost, making them an intelligent choice for any beginner looking to get started. Let's delve deeper into why index funds and ETFs are such powerful tools for beginners. When you invest in an index fund, you're essentially buying a small piece of every company in a particular index, like the S&P 500. This means that instead of trying to pick individual winning stocks, which can be risky and time-consuming, you're betting on the overall growth of the market or a specific sector. ETFs, or exchange-traded funds, work similarly, but offer even more flexibility. They can be bought and sold throughout the trading day like individual stocks, and they come in a wide variety of options. You can find ETFs that track specific industries, like technology or healthcare, geographical regions, or even investment styles, like value or growth investing. Both index funds and ETFs have historically provided solid returns over the long term. For instance, the S&P 500 has averaged about a 10% annual return over the past century, factoring in dividends and adjusting for inflation, While past performance doesn't guarantee future results, this gives you an idea of the kind of steady, long-term growth you can potentially achieve with these investments. With these smart and safe investments, you've set a strong foundation for your financial future. But if you're eager to explore options that could deliver even higher returns, stay tuned. We're just getting started. The next set of investments we'll discuss could potentially supercharge your wealth-building efforts, taking your financial journey to new heights. Now that you've laid a solid foundation, it's time to step up your game by exploring growth opportunities. This is where you take calculated risks for the potential of higher returns. After all, once your base is secure, you can afford to be a bit more adventurous and aim for significant wealth growth. Think of it as moving from the kiddie pool to the deep end. There's more excitement, but also a bit more risk involved. One of the most popular ways to do this is by investing in dividend-paying stocks. These stocks not only offer the chance for your investment to grow in value over time, but they also provide regular income through dividends. It's like getting paid just for holding on to your shares. For beginners, dividend stocks are a great choice because they offer a blend of income and potential for capital appreciation. Imagine owning a piece of a well-established company like Coca-Cola or Johnson & Johnson, where you not only benefit from the company's growth, but also receive a share of the profits regularly. Let's break down how this works. When you buy shares of a dividend-paying stock, you become a partial owner of that company. As the company makes profits, it distributes a portion of those profits to shareholders in the form of dividends. For example, if you owned 100 shares of a company that pays a $2 annual dividend per share, you'd receive $200 in dividend income each year, regardless of whether the stock price goes up or down. This regular income can be reinvested to buy more shares, a strategy called dividend reinvestment, potentially snowballing your wealth over time. But the benefits don't stop there. Many dividend-paying companies have a long history of not just paying dividends, but increasing them year after year. Companies that have increased their dividends for at least 25 consecutive years are known as dividend aristocrats. Investing in these companies can provide a growing income stream that helps protect against inflation. But if you're open to exploring an investment with even higher potential returns, and you don't mind taking on a bit more risk, there's another option you should consider: real estate investment trusts, or REITs. REITs give you a way to invest in real estate without the headache of dealing with tenants, property maintenance, or large capital outlays. With REITs, you can earn income from rental properties and benefit from property value appreciation, all while being completely hands-off. They're an excellent choice for beginners interested in real estate but not interested in the hassles of property management. Let's dive deeper into how REITs work. When you invest in a REIT, you're essentially pooling your money with other investors to buy a portfolio of properties. These could be apartment buildings, shopping centers, office parks, hotels, or even data centers. The REIT manages these properties, collects rent from tenants, and passes that income along to shareholders in the form of dividends. One of the great things about REITs is that they're required by law to distribute at least 90% of their taxable income to shareholders each year. This means they often offer higher dividend yields compared to many stocks. It's not uncommon to see REITs paying dividend yields of 4%, 5%, or even higher. But the benefits of REITs go beyond just high dividend yields. Real estate has historically been a good hedge against inflation, as property values and rents tend to rise over time. Plus, investing in REITs gives you exposure to the real estate market without needing hundreds of thousands of dollars to buy property directly. You can start investing in REITs with as little as the cost of a single share, which could be less than $100 for some REITs. Now that you've learned about some investments that strike a good balance between risk and reward, get ready for the final investment on our list, one that has the potential to be a real game changer for your financial future. This next option isn't for the faint of heart, but for those willing to embrace a bit more risk, the potential rewards could be life-changing. Now let's talk about the game changers, the investments that have the potential to truly transform your financial future. These are the kinds of opportunities that, while carrying more risk, could significantly boost your wealth if approached with the right strategy and mindset. It's important to remember, though, that these investments require a bit more knowledge and a higher tolerance for risk. Think of these as the financial equivalent of strapping on a jetpack. They can propel you forward at incredible speeds, but you need to know what you're doing to avoid crash landing. One of the most talked about game changers in recent years is cryptocurrency. Whether it's Bitcoin, Ethereum, or a new emerging tech stock, these assets have shown the ability to deliver massive returns for those who got in early. Cryptocurrencies are known for their volatility, meaning their value can swing wildly in a short period. However, with great risk comes great reward. Those who invested in Bitcoin a few years ago have seen life-changing returns, turning modest investments into substantial fortunes. Let's put this into perspective. If you had invested just $1,000 in Bitcoin in 2010, your investment would have been worth over $15 million at Bitcoin's peak in 2021. Of course, timing the market perfectly is nearly impossible. And for every success story, there are also cautionary tales of losses. That's why it's crucial to only invest what you can afford to lose when it comes to high-risk investments like cryptocurrencies. But cryptocurrencies aren't the only high-potential investments out there. Similarly, emerging tech stocks, think of companies at the forefront of AI, blockchain, or renewable energy, have the potential to skyrocket as they lead the way in innovation. These companies are working on technologies that could revolutionize entire industries. And getting in early could mean riding a wave of explosive growth. Take artificial intelligence, AI, as an example. The global AI market is projected to grow from $387.45 billion in 2022 to $1,394.30 billion by 2029, according to Fortune Business Insights. Companies at the forefront of this revolution could see their stock prices soar as AI becomes increasingly integrated into our daily lives and business operations. Or consider renewable energy. As the world shifts towards cleaner energy sources, companies innovating in solar, wind, and other renewable technologies could see tremendous growth. The International Energy Agency predicts that renewable energy capacity will expand by 50% between 2019 and 2024, led by solar PV. Investing in companies driving this change could potentially lead to significant returns. While these investments aren't for everyone, they could be incredibly profitable if you're willing to take on some calculated risks. If you're serious about making money and are ready to explore opportunities that could dramatically increase your wealth, this might just be the investment you've been looking for. But remember, with high-risk investments, it's crucial to do your research. Understand what you're investing in and never invest more than you can afford to lose. Let's quickly recap the journey we've taken today. We've explored the top 5 investments that are ideal for beginners, starting with safe and steady options that build a strong foundation, and moving up to high-potential investments that could dramatically boost your wealth. Whether you're aiming for consistent growth or looking to take calculated risks for massive returns, the key is to start early, stay consistent, and keep learning as you go. We began with the cornerstone of any solid financial plan: high-interest savings accounts and CDs. These provide a safe haven for your money, offering guaranteed returns with minimal risk. They're perfect for emergency funds or short-term savings goals. Next, we ventured into the world of index funds and ETFs, which offer an excellent balance of diversification and growth potential. These investments allow you to tap into the overall growth of the market or specific sectors without the need to pick individual stocks. As we moved up the risk-reward ladder, we explored dividend-paying stocks. These offer the dual benefits of potential capital appreciation and regular income through dividends. They're a great way to start building a portfolio that can provide both growth and income over time. We then discussed real estate investment trusts, REITs, which offer a way to invest in real estate without the hassles of property management. REITs can provide high dividend yields and the potential for capital appreciation, all while giving you exposure to the real estate market. Finally, we touched on high-risk, high-reward investments like cryptocurrencies and emerging tech stocks. While these carry more risk, they also have the potential for explosive growth that could significantly accelerate your wealth-building journey. Remember, the key to successful investing isn't just about choosing the right investments. It's about creating a balanced portfolio that aligns with your financial goals and risk tolerance. As you embark on your investing journey, consider starting with safer options and gradually exploring higher-risk investments as your knowledge and comfort level grow. Now, I want to hear from you. Which of these investments are you most excited to explore? Are you more interested in building a solid foundation with savings accounts and index funds? Or are you ready to dip your toes into more adventurous waters with cryptocurrencies or emerging tech stocks? Drop your thoughts in the comments below. And if you found this video helpful, don't forget to hit that like button, subscribe to the channel, and turn on notifications so you never miss out on our latest tips for building wealth. Your financial future is in your hands, and every step you take towards educating yourself and making informed investment decisions is a step towards financial freedom. Thanks for watching. And remember, building wealth isn't just about making money. It's about creating the freedom to live life on your own terms. So start investing today, stay consistent, and watch your wealth grow over time. I'll see you in the next video, where we'll dive even deeper into strategies for financial success. Until then, keep building that wealth.